This is Johnny. All right, all right, all right. Get that done, get that done, get that done. And here we go. Frumlum. I have no idea. Tony, Glitch, George, Canary. Oh, wow. James, Geo, Dennis, Danny, Smoey? Smoey, interesting name. Dan, Tony, what's happening, Tony? The War Within. Okay, interesting, interesting. Let's get this ball rolling. Jacob, hey James, thoughts about Kohl's? Let's take a gander at it. We'll take a quick look. That'll be the first one we look at today. Kohl's, there we go. KSS, Kohl's. Dropped again, another low for Kohl's. Cool. Gone fishing. What's happening? Good evening to you. Tony, Steven. Cool stuff by Jay. What's up? Thank you for waiting. I've been waiting, really? I start at 9. Yeah, okay. Every once in a while, I am a tad bit late. Good evening there, Mr. Michael. Let's get the ball rolling. Let's take a look at the very first one on the list today, and that's going to be Kohl's, KSS. Before we get started with that, first and foremost, my name is James. This is Dividend Stock Talk, where I look at dividend stocks to invest in for weekly cash flow. Now, what I'm looking for is a simple, safe, predictable, consistent 1% per week. Now, some of you may have been waiting and watching and trying to figure out what the hell did this guy do last year? Well, we actually did the numbers. Got them finished up today. Not perfect, not my thing, but I went on. Oh, check that out. Oh, it only stays up for a second or two. Anyway, besides the point. Scott, Nipper, Champo, what's happening? Me, the people? That's funny because there's also a name called We the People. Guess that's someone else. What color is a carrot? DCA on Palantir. I don't know why people like that stock. PLTR. PLTR. All right, we'll take a gander at it. Now, I normally don't do PLTR because without a dividend, you really, for me, this is my experience with companies that don't have dividends. Without having a dividend, how do you know when the stock is going to go up? I mean, think about it. I want to know when a stock is going to the top side. I bought the top. Now, the reason why I don't like companies that don't have dividends, because a dividend is a portion of the profits, okay, that goes back to us, okay? If the company's profitable, I get a check. That makes sense to me. Now, I'm at that point in my life where I'm 60, I'm retired, I don't want to have to go back to work. There's a huge difference between going to work because you like to and going to work because you have to. Okay, most people have to go to work. We're the only species on this planet that's got to pay to be here. Okay, so we got to pay just to exist. Anyway, so if the company is not sharing their profits, I want to know when is the company stock going to go up. Because let me go back here for a second, change gears a little bit before we move on to look at Kohl's. This here is a calendar. We all know what a calendar is. As the sands go through the hourglass, so do the days of our lives. Okay, some people may know that what is, and some people may not know what that is. But anyway, here's the thing. As the days tick by, there's no way to stop it. Time keeps moving forward. Well, great. The calendar, as you see these little green dots, they represent companies that are getting ready to pay a dividend. So the importance of the calendar, other than letting us know what day it is, just before the EX date, the little green dots, the stock price has a tendency to go up in value. So if the one is highlighted right here, this is called Clorox. We all know who Clorox is. They make bleach. Those white bottles with the blue and red, white, and blue lettering. Okay, Clorox bleach. They've been around for over 100 years. Okay, I grew up. Hey, get me the Clorox. Get me the bleach. Well, we all know it's Clorox bleach. Anyway, they're paying the dividend on the 29th of the month. So, hypothetically speaking, every 90 days. Now, this happens to be 1, 2, 3, 4, 5. The 5th week of the quarter. There's 4 quarters. January, February, and March. quarter one. That's where we are right now, first quarter. There's 13 weeks in the quarter. Well, Clorox pays their dividend the 13th week of the quarter. Quarter one, week 5. Quarter 2, week 5. Quarter 3, week 5. So consistently, week 5. So every 90 days, Clorox has a dividend. Now, every 90 days, the stock has a tendency to go up just before the dividend date. So if I know that ahead of time, it allows me to buy Clorox on the 13th, 2 weeks before, on a Monday. That way the stock goes up, I jump in, I get my little 1 or 2% that I'm looking for. Because I'm only looking for 1% a week. 1% is really not that difficult, if you think about it. So I'm looking for the 1%, and the reason I like dividend stocks, besides the fact that they share their profits, and I'm looking for profits, okay, I'm looking for cash flow. Because there's two ways of doing it. You're looking for cash flow, or you're looking for capital appreciation. Now, for those of you that are still working, I understand that you want capital appreciation. You buy a stock, hold on. Come on. You buy a stock and you want to see it go up. Well, this one's not going up, this one's going down. But you know what I mean. You want to see the stock go up and up and up. Well, that is one way of doing it. Now, you put your money into a stock, and you just watch it, and it goes up and up and up and up. That's capital appreciation. It's not what I'm looking for. If that's what you're looking for, you're in the wrong place. David, just me, Blue Wave, how are you all doing? What color is a carrot? What platform am I using? This is Think or Swim. Okay, it's owned by Charles Schwab. None of this stuff is mine. Okay, I just use this platform because I like it and I've been using it for 20 years. Okay, the same platform, 20 years. Guy named Tom Sosnos, okay, brilliant guy. He's one who created. He's a professional trader. That's all he does. He trades stocks. That's what he does. So he created Think or Swim. Okay, it got bought out by a TD Ameritrade. TD Ameritrade gave him an ungodly amount of money, and then he got bought out. That got bought out by Charles Schwab. So Charles Schwab owns this now. It's just a trading platform. That's all it is. So you're aiming for 1% cash flow every 90 days? No. I said the dividend gets paid every 90 days. I'm looking for 1% every week. 1% every week is 50% or more every year. Okay? I'm looking for 50% per year. That's what I'm looking for. 1% a week is 50% per year. Okay, so the reason why I like dividend stocks and dividend stocks only because the dividend date is when they pay their dividend. How is the weekly I just joined? Okay, Jay, just sit back, chill, watch. Okay, it's like a good movie. All the answers will come through as the day progresses. Now, I'm here every night from 9 until 11:30. So this is your first time here, so just chill and just watch it flow. All right, so the 1% a week. Now, the reason why I like dividends is because the calendar tells me when to buy a certain stock or when to look at a certain stock. If everything is lined up, you know, if the moon is in retrograde and Pluto's rising over Mercury, yeah, that's when I buy it. Well, what I know as 1% cash flow weekly is selling weekly options like covered calls. Well, Jay, that's exactly what we're doing here. But we got a little bit of a twist. Just chill, relax a bit, and you will see how it all unfolds. And hopefully, by the end of tonight's session, you'll say, "Ah, that makes sense. That's cool." Okay, that was my revelation when I came up with the idea 15 years ago. Okay, so let's keep on progressing. We're looking at Kohl's. First thing I always look at anytime I look at any stock is going to be the 1-year chart. Now, this is always my introduction. What do I want to do? Well, I'm looking for 5 things. Okay, you'll see there's a lot of 5s in my little repertoire here. 5 things. The high, the low, where was it, where is it, and what's the direction? Sideways, down. That's simple. Sideways, down. That's it. That's the 1-year chart. That's the grand scheme of things. Okay, great. So, second, I'm looking at what am I going to make from this one trade if I so desire to do it? Well, here we go. Here's the last trade of the day. Here's the bid, here's the ask, here's the open, here's the high, here's the low. Greetings from Arizona. Hey, what's happening? I'm buying it tomorrow morning, 1276. That's this number right up here, 1276, the bid. If I'm buying at 1276, the closest strike price is going to be the 13. Well, the 13 is going to be 12 to 14 cents. Okay, that's 1%. That's exactly what I'm looking for, 1%. Denzel, what's happening? Now I forget, today's Tuesday, right? Okay, so today's Tuesday, so tomorrow's Wednesday. All right, so here's the thing. If I'm going to collect 1% on this one company, I want to make sure it's the right timing. Because timing is important. Because stocks only do two things. They go up and they go down. Well, I don't want to buy it as it's going down. Simone! Woohoo! Simone's in the house! Ish mi amor. Ish mi amor. ¿Qué pasa? Oh, wait a minute. Ish mi amor. I have no idea. Moderna, huh? Okay, we'll take a look at that one. Good evening, James Frank. How are you doing? So, I want to make sure I'm buying at the right time. Because stocks go up, then they go down, then they go up, and then they go down. It's kind of like a roller coaster. You want to make sure you're jumping on the roller coaster as it's down, getting ready to go back up. XRP, sorry dude, XRP is not a dividend stock. That's going to be a no. Don't even want to waste my time with it. That's a no. No. All right, anyway. That's the 1 year chart. Great. There's our high right up here, 30 bucks. Here's our low down here at 12. That is an $18 decrease. That's over 50% decrease from the high of the year. Over 50% decrease. Great. Well, this is where we are right now. Let's take a closer look to see if it's the right time to buy calls. Now, I do have to let you know, I do have a bunch of calls because the numbers just work for me. All right, anyway, let's keep on going. Last year we were at 25.69. We topped off right around 30 for the last 90 days. Now the last 90 days is the last 3 months. And I'm looking at the exact same thing. Where's the high? Where's the low? Where was it? Where is it? And what's the direction? Down. That's basically it. Down. All right. So anyway, that's the 90 days. So the last 3 months. So I want to look at the last 30 days. Now the reason I want to look at the last 30 days is because the last 30 days are going to give me a good idea of what the next 4 or 5 days are going to look like. Because yesterday is going to be very similar to today. So what was today? Today was down. Well, what was yesterday? Down. What was the day before? Well, basically the same movement, see? A little to the downside. When it finds its bottom, which, I don't know, it could be today, it could be tomorrow, it could be the next day. Stocks go down. The funny thing is, it's like they go down until they're done. You know, they go down, they stop, they turn around, go back up. Look, down, turn around, went back up. Down, turn around, went back up. Down, eventually, tomorrow, the next day, the next day, the next day. One of these days, it's going to stop, turn around, go back up. That's where you're going to make most of your money, buying low, selling high. All right? So, I do own some Kohl's, but it's not a good opportunity to jump in now until the bottom is isolated. Sorry. I mean, don't get me wrong. I like Kohl's. I own a bunch of Kohl's. Okay, once it does hit the bottom, I will dollar cost average down to lower my price. All right, so, ish mi amor. Ish mi amor. Bonjour. No, I forget which language that one is. All right, anyway. Moderna. M-R-N-A. Whoops. Helps if I put it in the right place. mRNA. Now, ooh, that don't look good. Do you see that really quick? It doesn't take long for you to take one look at the chart and isolate those 5 items. High, low, where was it, where is it going? Sideways, up, down, sideways, down. Big gap right there. Now, the big gap, Alpha Energy. I hate crypto. Don't get me wrong. I don't hate crypto. Okay, now I don't hate crypto. I think crypto is an awesome idea. But that's all it is at this moment in time. It's an idea. Okay? That's like back in the late 1800s, automobiles was a great idea, but it was just an idea. How long did it take for the public to say, you know what, this is here to stay? Well, the public hasn't said that yet about cryptocurrency. Okay? Every once in a while, you will see a new sign pop up. I saw a sign in the store the other day. We accept cryptocurrency. Well, freaking, that's awesome. Great. Now find a way to trade cryptocurrency safely, predictably, consistently, without having to sit in front of your computer all day long. When that is figured out, yeah, I'll be more apt to do it. Stock market's been around for 420 some odd years. 1602 was the first dividend stock sold. Okay, when was the first cryptocurrency sold? Not 400 years ago. So until cryptocurrency has a little bit more hair on its chest, however you want to say it, after it's past puberty, yeah, maybe I'll take a look at it. Okay, but until then, I'm going to hold off on cryptocurrency. All right, so here's the movement before I move on, because I really want to see what's happening here, because this looks interesting. This is the last couple of days right there. I want to see that. But before I do, is it even worth our time? And that's very important to me, because when you get to a certain point in your life, now this is for everybody, when you get to a certain point in your life, everything changes. And what do I mean by that? Well, you wake up with aches and pains that weren't there the day before. You're getting gray hairs that weren't there the day before. Do you recommend Robinhood for stock trading? I actually use Robinhood. I actually use Thinkorswim. I have 7 accounts. 7 accounts. I have Robinhood and I have Thinkorswim. You've got to find out which trading platform is best for you. Now, I like this one. I've seen a lot of trading platforms. I actually wrote a book 15 years ago. How you doing, Sweet Jones? I actually wrote a book 15 years ago, choosing a trading platform. Okay? However, I chose this one 20 years ago, and it's still here. They haven't changed it. I love it when they don't change things. Yeah, no, not Robinhood the stock, Robinhood the trading platform. Okay, so before I decide whether or not I like Moderna, okay, because we just briefly looked at the chart, I want to check the numbers. Okay, maybe I should give you the rules first. Okay, in 2008, my daughter, who was 9 years old at the time, she jumped on my lap and said, "Daddy, what are you doing? Can you teach me to do what you're doing?" Seriously, a 9-year-old watching me trading every night. She says, "Daddy, can you teach me?" All right, so a 9-year-old, how do you create a trading strategy and how do you explain it to a 9-year-old? Well, it took me a while to figure it out. So I had to come up with a trading strategy specifically for my 9-year-old daughter. Okay, it had to be simple, it had to be safe, it had to be predictable, consistent, and no way for her to lose. So that being said, I had to come up with some rules to make sure she didn't lose and everything was good. Because we all know if a 9-year-old's not happy, she's going to start to cry and I'm going to feel like shit. Do you have any strategy suggestions for growing a small account? Yes, I do, Sweet Jones. Just chill out for a bit. I will get to it in a minute. Let me finish doing my explaining how it came about. So for a 9-year-old, simple, safe, predictable, consistent, no way for her to lose. Okay? Rule number 1. For my daughter was specifically, I got to pull this up so you understand it. Okay, specifically for my daughter. If it is not on the list, then it's no. Okay, you are going to need to choose which companies you want to invest in. You don't have to invest in them all at a time, all at once. Just make a list. Okay? Now, let's take a look at this. Ben Franklin, that's, wow, I don't even know why that one's there. Okay. MCKS McCormick, International Toolworks, Nucor, O Realty, APD. Why am I looking at this one? That's not mine. This one's mine right here. Okay, this one makes more sense to me. Comcast, Gap, Cisco, American Express, Bristol Myers Squibb, JP Morgan, Marvel, NTAP, Cisco, FCX, Abbott Labs, Oracle, Verizon, AT&T, MasterCard, so on and so forth. Every single company on this list here, this is my personal list. Every single company on this list you probably heard of. Okay, those are the only ones that I invest in because I know who they are. I've seen who they are. So rule number one, never buy something you don't understand or that's not on the list. Okay. Number two, never sell at a loss. It defeats the purpose of the game, and it is a game. It's kind of like Monopoly. Okay, you buy a stock, you make a profit. You buy a stock, you make a profit. You buy a stock, you make. That's the game. Number three, this is an important one. Make sure the company is consistently profitable. Why? What the hell are you thinking? What the hell are you thinking when you put your money into a company that's not profitable? It boggles my mind. People consistently ask me, can you look at this? Yeah, I'll take a look at it. But when I go look at the profits, the profitability of the company, I say to myself, why the hell are you putting money into a company that's not consistently profitable? You're either making money year after year after year after year, or you're not. It's actually that simple. You're profitable or you're not. There's no two ways around it. It's not like, okay, well, I was profitable last year. I know I'm not profitable this year. Give me some more money and I'll see what I can do next year. No, for me, it doesn't work that way. Three, consistently profitable. Four, make sure it has weekly options because the only way I am going to get weekly cash flow is through weekly options or sitting in front of my computer all day. And no, sorry. So as I was saying earlier, rule 5, make sure the numbers work. And we're going to touch on that in a little bit. Let's keep on going. Let's get out of here. We're still looking at Moderna, right? mRNA. mRNA. Okay, now. Alrighty. Second thing I want to make sure. Once I pick the stock, great. We're looking at mRNA. What am I buying it for? $34.50. Now, when I'm doing a covered call is one of the safest trading strategies there is. So you buy the stock, you sell somebody the rights to buy it from you for the exact same price. So if I'm paying $34.50, I want to sell it for $34.50. Now, a lot of you are probably thinking, why the hell are you selling it for the same price you're buying it for? Because I'm not looking for the stock to go up in price. I'm looking for it to stay where it is or go up, one or the other. I really don't care which way it moves because this is the number I'm looking for right there. Okay, that is the premium, kind of an insurance policy. So if I buy it at $34.50, I sell it for $34.50 using a covered call, which, by the way, is a safe trading strategy, one of the safest. I'm going to collect 88 cents a share. Now, I know you're probably thinking, well, 88 cents is not a lot of money. But if you got 1,000 shares, that's $880. If you got 1,000,000 shares, well, that's $8,800, something to that effect. Okay? It all depends on where you're coming from. 1% a week is over 50% per year. But look at this one. $34.50 is selling for 88 cents. Now, 88 cents on a $34.50 stock, well, that's more than 2.5%. 2.5% on a weekly basis is 75% per year. That's a huge difference. Wait a minute. No. That's 1.5% is 75%. 2.5% is 126% per year. Okay, so do the math. Okay, 2.5 times 52. That should be somewhere around 126, 128% per year. But it always comes back to the last question. do I like Moderna? And then the next question would be, do I like Moderna at this price? Hey, team Sagan, what's happening? Walgreens. Okay, Ricky, we'll take a look at Walgreens in a little bit. WBA. WBA. Hey. All right. So there's a bunch of questions you need to ask yourself before you do anything. Number one, does it make sense? Okay. Number two, do I like this company? Number three, do I like this company at this current price? Number four, am I willing to buy this company and hold on to it, collect the ever-increasing dividends, and hit my target? Because it might hit your target by Friday. That's my goal. Buy it on Monday, sell the covered call, get out by Friday. That's my ideal. Does it work all the time? No, I bet it works 50% of the time, or most of the time. But here's the thing. If it doesn't work for this week, great. I just made this one 2.5%. If it doesn't hit my target, well, great. I keep the stock, I keep the money, and then I do it again next week and collect another premium. So the beauty of dividend investing with weekly options is I can buy a good stock and write a covered call every single week, 52 times a year. So if you like a company and you want to buy the stock and you want to participate in some of their profits, well, great. You can collect the dividend. Well, if it's a good company, the dividend will increase every single year. But if you already own it, why not sell a covered call against it and bring in some more money? I'll give you a little example. Not last year, but the year before, 2023. I bought Kimberly-Clark. Now, I don't know if you know who Kimberly-Clark is, but it's a company that's been around for over 100 years. Okay, fine, and they're profitable, and they consistently increase their dividends. That's the only reason why I bought it. Well, I bought it, and the stock dropped. But here's the thing. As the stock dropped, well, I sold covered calls every single week. But here's the kick. A lot of people don't realize this. I held that stock for 9 months. That's the longest I've ever held anything. Just to let you know, just between you and me. That's the longest I've ever held anything, 9 months. But what happened in that 9 months? Well, in that 9 months, I collected 3 dividends. Yay! But I collected over 30, that's 30 premiums. Okay, so 3 dividends and 30 premiums every single week. Well, the stock finally went back up, and I sold it for basically the same amount of money I paid for it, but I got all that profit in between. Okay? Anyway, let's keep on going. So, Moderna is paying over 2.5%. See, there's a number right there, over 2.5%. So we're going to do a practice trade just to show you how it works. And for those of you that are new here, you'll see how the process works. So hold on a second. My ginger tea with honey. It's good for my throat. Talking so much bothers my throat. All right, anyway, okay. First and foremost, we want to check and make sure if it's the right time to buy. Now, just because the numbers look great, 2.5%, is it the right time to buy? Now, we're looking at the 1-year chart. We've already seen everything we need to see, high, low, where is it, where's it going, that type of thing. Well, now we want to take a look at the 90-day. Now, if you want to take a look, if you want to break it down to, 1 year, 6 months, 3 months, 1 month, totally up to you. I have 5 charts that I like to look at. Okay. High, low, where was it, where is it, what's the direction? Down, up, big drop, what's happening here? That's important to me. What's going on here? Now, Moderna, the jabby thingy, depends on how you feel about that company. Either you like it or you don't. I'm assuming Ishmiamor is liking it. So let's continue, see what it looks like. The last 30 days, which would be December 14th, right? There we go. December 14th was a Saturday, so we'll have to be satisfied with December 16th. All right. 30 days ago, 42. She drops down to 38, shoots up to 48. Now, here's something you need to keep in mind. And this is very important because a lot of people don't think of it this way, but it's very important. Your previous bottom is right here, right around 38. Okay, from 38 to 48, that's a $10 move. A $10 move on a $38 stock is over 25%. You heard me right, 25%. A 25% increase in 1, 2, 3 weeks. 3 weeks up 25%. So here's a question. Now, you may be different, but I'm going to tell you exactly what I would do. Stock jumped up 25% in 3 weeks. Yeah, I'm jumping out and taking my profits. What does that usually do? Well, if you're up here and you're up 25%, profit taking, the stock drops. Well, this one dropped pretty big. All right, now it's at 32, yesterday's bottom, and today we're at 34. So that's 1 day to the upside. I personally like 2 days to the upside. But what I love a gap down, especially a big gap down. You get a big gap down like that, what normally happens, especially after a 25% increase, big fat profit taking, big gap down, she finds the bottom here, turns around, looks like it's getting ready to go back up. I like 2 days to the upside. Today was 1 day to the upside. Well, great. Tomorrow might be the second day of the upside, which means Thursday is a perfect opportunity for me to jump in for looking at 1%. Now, we just saw a 25% increase, okay, and then a big drop. It's almost a perfect setup to jump in and grab another 1 or 2%. But that's me. I like to get in small amounts because 1% a week, every single week, is over 50% a year. Now, let me tell you a little story. Sorry, I got to write this one down because I like it when it looks this way. MRNA. All right. I was at a gas station a couple of months ago, and this gentleman pulls up, and it was a Lincoln Continental, beautiful black car, all shiny, looked nice. And here he is, looking dapper. Remember that word, dapper, really spiffy. And he was an older gentleman. I said, "Hey, you're looking good there, buddy. You just coming home from work?" Because he had that, that name tag on. He says, "Yep." So let me ask you a question. Okay, don't be insulted. You're a little older. Great. Okay, you going to work because you want to get out of the house? Get a little bit of free time. He says, "Nah, I got to pay the bills." I say, "Wait a second, hold on. How old are you?" 84. 84 years old, and he has to go to work to make ends meet. And I'm thinking to myself, oh shit, I definitely don't want to be in that position. But you never know what life has in store. I mean, at this moment in time, I'm perfectly healthy. 60 years old, perfectly healthy. I'll be 61 in a couple of days. But here's the thing. I'm perfectly healthy now. Well, what happens when I'm in my 70s and 80s? All this money I have set aside that's bringing me in, the income for me to live the comfortable life that I'm living. Well, what happens if I need a surgery or something happens and it wipes out all my money? What the hell am I going to do now? I don't want to go back to work at 84. Hell no. So I'm trying to not be in that position. But at this moment in time, I can relax and I can do nothing. So we'll see what happens. So this big drop down, this could be an opportunity because gaps have a tendency to fill. What does that mean? Well, this means this is going to fill, which means the only way it's going to fill is the stock goes up. So it's a great opportunity if you like Moderna. If you like Moderna at this current price, buy it at the current price, sell it at the exact same price, collect this premium over here through a covered call, simple, safe, predictable strategy, and you're getting over 2.5% for 1 week. Great. Well, what happens? Well, in a week, if it hits my target, great. I have all my cash back and I can go do something else. Will Moderna be ready for a second week to do it? Maybe it will. We don't know. We don't know until it's in front of us. But at this moment, it's an opportunity knocking for me. Because I like the company. All right, anyway. Let's take up some more questions. Oh, wait a second. We're actually going to do a practice trade on this one. So for those of you that are new here, have never seen the covered call, pay attention. Oh, before I forget. This screen here Okay, the screen. I like doing that. People panic when I do that. It's just, light. This screen here is live on YouTube, which means you can go to YouTube, the 10-Minute Trader, okay, on YouTube, and this is live at this moment in time. It makes it easier to see these little tiny numbers, because you probably can't see these numbers on your phone or on your tablet. And I say, well, look at this number here. And you're probably saying, what the hell is he talking about? I can't see it. This is why this screen is live on YouTube, and just to let you know, we are currently being recorded. Okay, so I record all my sessions, so yeah, tomorrow you can pull up this recording and watch it over again if you have any questions. Now on YouTube, there are 2 recordings. One, me standing in front of the screen, and one, just the screen alone. Now just the screen alone will give you all the numbers, and it doesn't have me pointing though. Okay, it does have the little cursor moving around. Okay, but combination of the 2. I try to do the best I can. I'm not perfect. I do the best I can with what I have to work with. Let's take some more questions. Wait a minute. Let's do a trade. Okay, so let's get rid of this. Remember, we like the 34.50. So the first thing I'm going to do is I'm going to change this right here. Now the nice thing about Think or Swim, you just click a button and it sets the trade up for me. This is all the covered call strategy right here. Thank you, Michael. Thank you for that. I like the 34.50s right here. See, here's the strike prices. Strike prices, and here's the numbers right here. 31, 32, 33, 34, so on and so forth. I like the 34.50 because that's where the stock is now. 34.50, here it is. Hit that buy, and it sets up the trade for me. It does everything for me. That's one of the reasons why I like it so much. Now, I do have to admit, when you first open up Thinkorswim, the trading platform, and try to figure it out, it's confusing as hell. That's why I offer to all my followers, if you want, I will walk you through setting up your account. Because believe it or not, this would be weird because a lot of people don't understand this. I'm here to help. I'm not really here to ask for money from you. I'm showing you how to do this for free. Okay? Only because I hate the fucking government. I hate what the elites are doing to the little guy. And trust me, I'm a little guy. I'm so far under the radar they don't even know I exist. Okay? So I like to show people things that upset the apple cart. I'm pretty sure a lot of you don't know what that means, but it is what it is. All right, so it sets it up all for me. It's right here. I'm going to actually read it to you in a minute, but before I got to change a few things because I have it preset for 10 contracts, which is 1,000 shares. It might be a little bit much for some people, so I want you to do one contract. One contract makes it easier for people to compute in their heads. Okay, one contract equals this. Well, great. Well, I can afford 3 contracts, or I can afford 15 contracts. So the math is always the same. And that's why I always go by percentages. I don't want to say, well, I made $50,000 this week. Well, people are going to think, well, I can't do that. No, 1%. So if you have $10, 1% of $10 is 10 cents. Is that right? Yeah, 1% of $10 is 10 cents. 1% of $100 is $1. 1% of $1,000 is $100. 1% of 100,000 is 1,000. Okay? 1% is 1%. It's easy for people to comprehend that. So if I'm showing you one contract, if one contract equals 5, well, 5 contracts are equal to 25. 10 contracts are equal to 10, so on and so forth. All right? So one contract at the market price. Now, the reason why I do market price when I'm entering, because here at Thinkorswim, you're allowed to do 2 trades at the same time. I'm buying the stock, selling the option. It's called a covered call. They're tied together. So the profit is already built in. So I want it filled instantaneously, first thing in the morning. Now, I'm going to read some numbers to you and see if it makes sense. All right? Here we go. Okay, so that's a trade right there. I'm going to hit confirm and send. Here's the trade. I'm going to read it to you. Now, I always tell people read it out loud because your eyes and your fingers can play tricks on you. Most people lose their money at first by hitting the wrong button. It sounds silly. Seriously, it sounds silly. But most newbies lose money at first by hitting the wrong button. All right, so let's say it out loud so you hear what it sounds like. Buy 1 Covered call of Moderna, mRNA 100s. That is the weeklies. 17 January 25. Well, that means the option is going to expire this coming Friday. So when you buy a stock and you sell an option against it, you can't really do anything with that stock until that option expires. Well, the idea is to buy it at the current market price and sell it for the exact same price I just paid for it and collect a premium. And I'm going to show you exactly what that premium is. Hold on a second. Buy one covered call mRNA 100s, 17 January 25. That's this coming Friday. The 34.5 call against the stock mRNA at the market to open. That's the order. That's what it sounds like. Okay? Now, the very next line down is called the break-even point. Well, the break-even for this is $33.54. That's almost $1 less than what it's at now. Because right now the stock's at $34.51. If the break-even is $33.54, that means anything over $33.54 coming this Friday, I'm going to have some type of a profit. Not the maximum profit, but some type of a profit. That's the break-even. All right. So, if the stock is above $34.50, come Friday afternoon at 3:59 p.m., because remember the stock market closes at 4, 3:59 p.m. is the last time you can make a trade. I'm going to collect $96 per contract. One contract, $96. Two contracts, well, you just multiply by 2, then 3, then 4. Okay, but, what is that contract costing me? Because you got to buy the stock first in order to be able to sell it to someone else and collect that premium. Well, the premium's $96. So let's take out the calculator and figure out what the rate of return is. Okay, so if $96 is my maximum profit, see it right there? Maximum profit. What is the cost of the trade? Well, the cost of the trade plus commissions is $3,354. Okay, $3,354. So I divide the profit, 96, by 3,354. And it comes to a grand total of 2.8% for 1 week. Actually, not 1 week, till Friday. That's this Friday. Wednesday, Thursday, Friday. That's only 3 days. 2.8% for 3 days. Now, I could, if I wanted to, sell next week's option and get a higher premium. Let me, I'll show that in a second. But here's the thing. If I buy it tomorrow morning, I sell somebody else the rights to buy it from me for almost the exact same price I paid for it. Because right now, the price is $34.51. Okay? $34.51. And if I sell it for $34.50, well, that's 1 cent less than I paid for it. But I'm bringing in $98 per contract. And that's 2.8% for this week. Let's see what next week would look like. So we're going to abandon this, get this out of here. We're going to get out of here. We're going to delete that. And we're going to go to, see this date over here? 17 January 25. That's this Friday. 24 January 25. That's next Friday. So let's see what that one is. So it's same price. If I buy it tomorrow morning, $34.50, and I sell it for $34.50 for next week, $34.50 right here. Here we go. One contract again at the market, and confirm and send. Here we go. So it's almost the exact same. But listen, buy one covered call Moderna 100s, this is the weeklies, 24 January 25. That's next Friday. The 34.5 call strike against Moderna at the market to open. That's the trade right there. That's the trade. So break even, $32.99. Well, the break even is a little bit less. So as long as the stock is above $32.99, come next Friday, well, I'm going to be in a profit. But the maximum profit, $150 per share. Well, that's a lot higher. Robin, what's happening? Robin's just joining us over here on Instagram. Okay, so let's do the math again. Let's bring my calculator. Okay, clear this. So if my profit's going to be 150, well, the purchase price is almost the exact same, 3,300. And that's going to equal 4.5%. But that's for 2 weeks. Not 1 week, but that's for 2 weeks. Okay? And I can always sell a contract for 3 weeks out or 4 weeks out. But here's the thing. The further out you push it, the less rate of return per week you get. The higher rate of return is week by week by week. If I go every 2 weeks, it's not going to be, the highest per week. All right. Anyway. All right. So that's Moderna. So the couple of questions you have to ask yourself. Number one, does it make sense? Number two, do you like the company? Number three, do you like the company at this price? And number four, are you willing to hold on to it? Collect the dividends for however long it takes in order for it to hit your target price. And if you're buying it at $34.51 and your target price is $34.50, that should be a no-brainer. Should be. But you still have that itching question in the back of your head. Do I like Moderna at this price? All right? That's that. Let's move on. Let's keep on keeping on. Got to make the best of. All right. Let's get back to where we started from, and let's move up to more questions. So, while you guys are here, I just want to let you know, I will answer every single question. So, as you put a question up on the board, I will answer it. But it might not be exactly when you ask it, because I do stop the questions and I do read them one at a time. All right, so let's take a look. What's the next question we have? Next question, Scott, Wade, Savvy, the villains. Oh, the villain, that's cool. Leo, why would Moderna be on your radar? It has no dividends, or is it just a great opportunity? Now, Leo, I did not ever say that Moderna is on my list. I only said, you put up a stock, I will take a look at it. So somebody before you, okay, in the comment section, asked me to take a look at Moderna. So I'm looking at it, and this is the numbers. And that's what the numbers are saying. Whether or not you like it, that's totally up to you. Whether or not I buy it, probably not, unless the numbers in the chart was so appealing. I mean, this is, in my humble opinion. Now, I like 2 days of the upside before I ever jump into anything that's bouncing off of a bottom. Because we don't know if yesterday's bottom is actually the bottom. Because today was higher than yesterday. If tomorrow is higher than today, well, that's my 2 days to the upside. And I love a gap down. Gaps have a tendency to fill. So it's kind of like a good opportunity. Would I do it? I would really have to weigh the pros and the cons. Okay? But it's a good question. Thank you for that. But no, it's not on my list because it has no dividends. Don't. Ooh. Sherman, I want help setting up my sink or swim. Okay, Sherman, what you got to do is send me a DM here on TikTok. Say, hey, it's Sherman. Here's my... Be sure to include your phone number. That way I can actually call you so we can set up a time in order to be able to do that. Rich Duncan, Liv Frank, Rob Bambino. Rob Bambino. Yeah, I know that Moderna has no dividends. Does it make your list? No, it's not on my list. I was just looking at it for another person. Glad you did the Moderna lesson breakdown for us new here. Sweet Jones, I'm glad you like it. Now, Sweet Jones, I haven't forgot about you. Okay, but remind me, hang out, and I will show you how this strategy works or something similar to it. with lesser money. Okay, so we'll get to that in a little bit. Let me go through these questions. I have 99 questions sitting here. Oh, 99 entries. They're not all entries, just people joining. All right, Galan, you did that today? That's me. Cool beans. Cool, you got that one? All right. Keitha D, Mr. Darrell, back again. Mike Thomas, Wendy House, how are you? Aaron. Odin the Mighty. Ooh, the Mighty Odin. Isn't it the Mighty Odin? Not Odin the Mighty? I don't know. T-Bone, what's happening? Vasily. Wanderer of All. Wingspan, live stuff. Pause, back again. Robert Lee, what's happening? Stu Gatz. Ooh, Gallant wants to take a look at Bax. Bax. Isn't that Blackstone? B-A-X. Baxter. Oh, BX is Blackstone. BAX is Baxter. Okay. All right. First thing, always, for me, you guys have to figure out your own routine, figure out what makes sense to you. But for me, very first thing I want to see is the 1 year chart. The high, the low, where was it, where is it, what's the direction, up, down, up, down. Now she's bouncing back up after the bottom of the year. Here's the bottom of the year. Let me know one thing. You're going to make most of your money buying low and selling high. I've never heard anybody said, hey, Baxter's at the high of the year. Let's buy it and wait for it to go higher. No, that doesn't make any sense. Buy low, sell high. You've heard that all the time. You're not going to get any lower than the low of the year. Okay? But the question always comes back to, do you like the company? Are you willing to put your hard-earned money into this and just hold on to it? DeMac, what chart is that? That chart is the 1 year chart for Baxter, B-A-X. All right, so once I look at the chart, now when I get to a chart where it's a hell no, yeah, you'll see. Right now, this is a maybe because everything looks interesting. The high, the low, it's bouncing off of here and going back to the upside, which is a great opportunity depending on a few other parameters. And we're going to get to those in a second. Let's take a look. Now, because the 1 year chart looked okay, now I'm going to look at the numbers. Do the numbers make sense? If it doesn't make sense, I'm not even going to bother because that's important to me. Consistent profitability is important to me. All right, so currently the price is 31. The 31's going for 0. That's a hell no. Sorry. That was quick. Okay, the chart looked okay, but the numbers are horrible. So that's a no. Next. Sorry, Gallant. The numbers just don't look right. Ooh, Allie. That was quick. You come up with a new one really fast. A-L-Y. And Allie is on my list. Allie Financial. Same thing. High, low, was, is. What's the direction? And it's going up. 35.45 to 35.50. That's a yes. Great. Now the numbers look good. Now let's check out the chart and see if the chart makes sense. Okay? First and foremost, a year ago, we were at 30. Bottom of the year is 31.81, and that was last January. The high of the year, 45.30, that was the end of July. Well, look at this big drop here. Okay, 44, and it drops all within a month. It goes from 44 to 32. That's a big drop. This is one of the reasons why I don't hold stocks for a long period of time. You know, I'm in, I'm out, thank you very much. Okay, let's look at the last 90 days, because the last 90 days gives me a good idea where the stocks are moving. It also gives me the opportunity to look for a pattern. Well, what's the pattern? Well, here it is. Up, down, up, down, up, down, up, down. Now it's going back up again. Clear as day. I love clear as day because you can't misinterpret it. All right, so that's the 90-day, high, low, all that kind of stuff. Let's look at the 30 days because the 30 days is going to give me the idea of where it's going next. And look at this. This is gorgeous. This is my humble opinion. 30-day high, 30-day bottom. Now she's bouncing up. She drops, shoots up, pulls back. Now look at here. The previous 30-day bottom. That was at 34.50. Jumps up to 37. That's $3.50. $3.50 on a $34 stock, yeah, that's a 10% increase. 10%. Are you going to take profits if your company goes up 10%? I am. Okay, you guys know I'm going to take profits at 1 or 2%. That's what I'm looking for. But this is 10%. So yeah, the stock drops. Now it's here. I'm looking for another jump up. Well, this is one day, this is another day. So I'm looking for another day to the upside before I jump in. But if I do, what am I collecting? Well, 35.45, the 35.50 is going for 50 cents. That's over 1.5%. 1.5% on a weekly basis is 75% for the year. Well, I don't know about you, but I can live very comfortably off of a 75% return. Granted, you're not going to get 1.5% every single week. Now, I do average over 1% every single week, and I have for the past couple of years. Okay, I've been doing this for 15 years. I've been trading for 20, 2 decades, 20 years. But my first 5 wasn't that great. It wasn't until 2008 when my daughter jumped on my lap and said, "Daddy, can you teach me?" That's when I came up with this strategy, because it had to be specifically for a 9-year-old. It is simple. Adults have a tendency to make this more complicated than it needs to be. All right, anyway, that being said, Alley Financial, 35.45. The 35.50 is going for 50 cents. Everything looks great. I want one more thing I want to show you guys. I haven't shown it to you yet. Let's take a look. And I remember, seriously, I remember when this came out. You ready for this? The seasonality chart. Now, probably some of you are thinking, what the hell is a seasonality chart? Well, here it is. Are you ready? Oh, this is good. All right. Here's the chart. All the way to the left, January 1st. All the way to the right is December 31st. It's the whole year. Well, what is this little tiny blue line? Well, this little tiny blue line is from January 1st to today. Well, it's only about 5 or 6 days, because there's not that many trading days that we're into so far this year. Okay? But the red line down here, this represents 10 years of data. That's 2015, 2016, 2017, 18, 19, 20, and so on and so forth. 10 years, average movement. Look at the first quarter. This is where we are right now. I want to isolate just the month of January. Here's the month of January right there. Okay? Here's where we are right now. Okay, get those cross lines right there. Okay? Here's where we are right now. Okay? It's steadily going to the upside by the end of the January. Oh, that's a yes for me. So you get the 1 year looks okay. The 90-day looks okay. The 30-day looks okay. Even the seasonality looks okay. So the 4 charts look great. All right, so let's get this back to where we were. And let's actually do a trade on Alley. All right, I like the 35.50s, so let's do a 35.50. Again, we're going to change this to a covered stock. I love Thinkorswim. Everything is right there. I'm going to do a 1 week, 35.50. Here it is right here. Change it to just 1 contract right there at the market, so it fills first thing in the morning. Hit confirm and send. Read it out loud so that it makes sense. Buy 1 covered call Alley 100. That is a weekly. 17 January 25. That's this coming Friday. The 35.50 call strike against the stock at the market to open tomorrow morning. So hypothetically speaking, tomorrow morning at 9:31 a.m., I will be in and out of this position. It means I will buy the stock, I will sell the option, all within a couple of seconds of the market opening. Okay, because it's at the market. So as soon as the market opens, and they're tied together. So the profit is already built in. Do you remember the part where I say simple, safe, predictable? I already know what I'm going to make on this trade before I even do it. Most people just buy a stock. Well, I'm going to buy the stock now, and I'm going to wait for it to go up. I don't have to wait for it to go up. I know what my profit's going to be. I'm not greedy. I want 1% every single week. That's 50% per year. So if I have 100,000 in my account, 50% of 100,000 is 50,000 a year. 10 minutes a day for $50,000. Yeah, I'll do that all day long. But that's me. You have to figure out what works best for you. Now, I'm not telling you should do this. I'm just showing you what I do. This is what I do. If you agree with it, fine. Well, we got a couple of people joining us over here on Instagram. Jaleel, ooh, cool name, and Joe Sullivan, back again. Jojo, what's happening? All right, so this is Ali Bank. Read it out loud. That's the numbers right there. The profit, the break even is $34.79. Right there, $34.79 break even. The profit on this trade is $70.50. So let's whip out that calculator and do some calculating. That's what they're for, right? What else is a calculator good for? Calculating. All right, so the profit, $70.50 for one contract. If you can afford to do more than one contract, great, more power to you. Okay? Now, I'm going to divide that by the total, the cost of trade including commission, $3,480. $3,480. And that gives me a grand total of 2% profit. 2% for 1 week. Now, 2% every week is over 100% per year. I don't know how you're going to live with yourself by making 100% per year. That's doubling your money every year. Well, I can deal with that. How about China stocks? No. If they're not listed on the U.S. Stock Exchange, it's a no. If they do not have 2 decades of consistent profits, no. If it has no dividends, no. If it has no weekly options, no. It's really not that difficult. Bibzig, what's happening? Uh-oh. Jojo wants to take a look at Alcoa. Okay, Joe, we'll take a look at that in a second. So here's the thing. Here's a thing. You'll hear me doing that a lot. Here's the thing. Okay. We checked last week. There are 9,813 different companies that you can invest in at any time on the U.S. stock market. Now, Canada has its own stock market. South America has its own stock market. Europe has its own stock market, so on and so forth. Almost every country has their own stock market. You need to decide where you want to focus. I'm focused here on the U.S. economy because this is where I live. I understand this. I've been doing it for 20 years. Granted, my first 5 weren't that great, but my last 15, 1% a week. Gotta love it. All right, anyway. Sherman, can you do the same thing that you're doing on Think or Swim on Robinhood? Yeah, but it's a little more complicated on Robinhood because Robinhood doesn't have all the screens available. See, Think or Swim, I can look at the chart. Hold on a second. Let's get out of here. Let's get out of here. Let's get out of here. Let's change this. Let's go back to here. Let's go to here. Okay. Hold on. I haven't forgot you. Hold on. Irina, how are you today? Nice of you to drop by. Alrighty, one of the main reasons I like Think or Swim. Sweet James, are you able to demonstrate on Fidelity? No, I don't like Fidelity. It's too clunky for me. Now, the reason why I like Think or Swim, you ready? Stock prices, option prices, stock chart, seasonality chart. I can see everything on one screen. Think or Swim. Wait a minute. Jamar, where do you find the short EX dividend date so easily? Hold on a second. I'll show you that in a second. Okay. I can see everything I need in order to make a decision on one screen. Robinhood, I have to go screen to screen to screen, and I need a piece of paper so I can write stuff down, because as the older you get, the more forgetful you get. All right? So what did I just buy that stock at? I got to write it down. But here, I know exactly everything. And if I pick something, okay, now I have the stock information, the option information, the order in which I'm doing, the chart over here, and the seasonality chart. I can configure this screen any way I want. I can't do that with Fidelity. I can't do that with Charles Schwab. I can't do that with Robinhood. Okay, I've looked at many. I wrote a book 15 years ago, Choosing the Right Trading Platform. This trading platform was created by a professional trader, not a corporation looking to maximize their dollars. There's no sales crap here. Hey, buy this crap. Hey, buy that. No, you get that everywhere else. You don't get that here at Thinkorswim. Thinkorswim is made by a professional trader for professional traders. There's nothing here that's trying to sell me something other than what I'm looking at. Because I went to Robinhood. They have ads on their apps. I've been to Charles Schwab. They have, hey, we have this great little thing. Why don't you buy it? No, I don't want to see that crap. I only want to see this. This is what I'm looking at. Now, granted, I don't look at all of this. I have it pretty simple. I don't really use this as often as I should. Pull that down. Oh, come on. That thing should be moving. There it is, right there. All right, get rid of that. Okay. All depends on what you want. I like simplicity. Hey, it's Jim Bibby. What's happening? All right, so that's Allie. Again, you got to ask yourself the question, do I like this company? Do I like this company at this price? Am I willing to hold on to it until it hits my target? Continue to collect those dividends. Joe, we're going to take a look at Alcoa, AA. And yes, Alcoa is on my list, I think. Okay, here we go. Alcoa. All right, first and foremost, it's the same thing over and over and over again. Where's the high? Where's the low? Where was it? Where is it? What's the direction? Sideways, up, down, up, down. It looks like it's turning here. It looks like a perfect opportunity to jump in. So only thing that tells me, let's look at the numbers. 37.18, the closest is going to be the 37 at 64. Hell yeah. Or the 37.50, 42. That's a yes also. I would more likely go for the 37. It's a safer trade. I like safe trades. So if I buy it at 37.18 and I sell it at 37, yes, I know I'm losing 18 cents. But the 37 is selling for 64. If I take the 18 cents off of the 64, well, now I'm making 56. Well, because I'm losing 18. Remember, if I buy it at 37.18, I sell it for 37, I'm losing 18 cents. That 18 cents has got to come from somewhere, because I sure as shit don't want to lose money. So I take the 18 cents out of the profit. Well, right now it's 64 cents. So I take 18 cents off of that, I'm walking away with 46. Yeah. And 46 is more than 1.5% of 37. The numbers have to work for me. And it's all a numbers game. Simple, safe, predictable, consistent, no way to lose. Never buy something you don't understand. Never settle at a loss. Make sure the company's consistently profitable. Weekly options are a must. And make sure the numbers work. Well, the numbers work. Great. Now, what's the chart telling me? Well, let's take a look. Here's the high. Here's the low. A year ago, we were at 28.72. We bottomed out at 24.75. That's the bottom of the year. Shoots up, pulls back, shoots up. Last 90 days, last 3 months, 42, jumps up to 48, drops to 35. 3 days to the upside. 1, 2, 3. Awesome. How about economy data like tomorrow? Don't you recommend that before trading? Absolutely no. Here's the reason why no. Economic data. That's a good question for you to be concerned about economic data. So explain to me. Economic data. How do you explain economic data to a 9-year-old? Remember, this trading strategy was created for my 9-year-old daughter. I had to eliminate a lot of the noise. So, if the company, Alcoa, has been in business for over 100 years, consistently profitable, and been increasing their dividends consistently for 5 decades, not 5 weeks, not 5 months, not 5 years, 5 decades. They have seen World War I, World War II, Korea, Vietnam, the Great Depression, stock market crash, the oil embargo of the 70s, the crash in 87, the Y2K crap in 2000, the dot-com bust, the economic meltdown in 08, the pandemic in 2021, all the wars over in the Gulf. And they still increase their dividends. Explain to me how all that crap has unaffected this company from increasing their profitability over the last 100 years. And you think one report on the economy tomorrow is going to affect this company? No. It has to be simple, safe, predictable, consistent for a 9-year-old. So that is not a factor. If the company is going up 3 days to the upside after a bottom of the year, you are not going to get any lower than the bottom of the year. This is a new type of trade to me. Thank you. Yes, it is. It's totally new, totally off chart, and you need to change your thinking. This is not annualized trading. Oh, I made 30% this year. No, 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 no. This is weekly. This week as opposed to next week as opposed to last week. What is the company doing? Well, it's simple to see. Here's the 90-day chart. Well, 90 days ago it was at 42. Then it jumped up to 48. Now, 42 to 48 is a $6 move. A $6 move on a $42 stock, because at the time it was 42. Okay, that is almost 15% increase. A 15% increase in, what is that, 1, 2, 3, 4, 5 weeks? Yeah, there's going to be profit taking. And the profit taking started a downhill fall. And it's just like down, 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 down. A little bit of bounce here. They call that a dead cat bounce when it makes a big drop like that. A little bit of bounce, but it kept on going. Here's the 30-day bottom. Here's the bottom of the year right here. Okay, let's zoom into it a little bit closer. Because I like the 30-day chart, because the 30-day chart gives you a good idea, a better idea of where it's going to be in the next couple of days. Well, the next couple of days, well, that's all I'm interested in. What can I jump in today? Sell a covered call, a simple trade, okay, simple, safe, predictable trade, to be profitable for just 1%. That's what I'm looking for, 1%. All right, so 30 days ago, we're at a little over 39. Drop, retrace, drop, retrace, drop. Here's the 30-day bottom right around 34. Okay, so from 34 bottom to 36.88, that's $2.50, $2.50 on $50. It's only like 7%. So from here to here is only 7. But the last big increase we saw was 15. So is it going to continue going up? Well, look where the high is. The high is way up here at the 39 area. Well, we're currently here at 36. There's a lot of space up here for it to go. Could it go up? Yeah, it could. Is it going to? Well, we'll see. But everything, here's your high, here's your bottom, now she's going back up. That's all stocks do. They go up, they go up, and they go down. They go up, they go down. Okay, so oh, look at this. I got another one. Ah, that's funny. Anyway, here's the 30-day bottom. It's going to go back up. Is it going to? Maybe, maybe not. Let's check the seasonality. Now, the seasonality, basically, what has the stock done this time of year over the last 10 years? What did it do last year? What did it do the year before, the year before, the year before? Well, the seasonality chart tells us that. Here we go. Seasonality. Holy shit, that looks nice. Ooh, sorry. The blue line is this year. It's only a couple of days this year. The red line is the average movement throughout the year. Now, I sure don't want to own it here. Look at that big drop. I don't want to own that. But look over here, where we are now. Nice upward movement from the middle of January to the middle of April. Well, that looks good. Steve, letters next to letters next to the premium. What do they mean? Oh, the letters next to the premium. Hold on one second. Let's do this first, and I'm going to tell you. Okay, hold on a second. Okay, so we're here now. Where's it going to go in the next couple of weeks? Okay, here's where we are. See the blue line right there? Okay, she might dip a tiny bit more. This is historical pattern. Doesn't mean it's going to happen. And then she shoots up nicely. Now, the interesting thing about history are the channels. I have no idea what that means. Okay, usually, sometime next week around the 20th, she should shoot up. But here's the thing. Seasonality is trumped. You like that word? Is trumped by current movement. Okay? The current trend supersedes anything and everything. Because as a river is flowing, whatever direction it is going is the direction it's going. Just because it went this way last year doesn't mean it's going to go this way this year. Okay? It might go this way first, then go that way. So the trend, okay, the trend is down, but here's the point right here where it's turning around and starting going back the other direction, because that's all they do. The seasonality says it usually goes up this time of year. Well, great. Everything's pointing that direction. Now, somebody asked, what are the numbers next to, what are the letters next to the premiums right over here? X, C, E, C, X, Q, J, D. Those are the brokerage houses. Usually, years ago, the stock market was in New York. The only place you could trade stocks was in New York. Well, now it's a little different because you can trade New York, Boston, Pittsburgh, Chicago. I'm not quite sure. So anyway, the letters represents the exchange, what stock exchange it was. Because the options are traded in Chicago. Stocks are traded in New York. But nowadays they have hubs all over the place. So there is a stock market in Boston. You can go to Boston and trade stocks in the stock market in Boston. But it's not like the stock market in New York. It's a lot smaller. Like the one in Pittsburgh, it's a lot smaller. But you can it's still an exchange in which the trades are. Okay, that's what those letters are. Okay, so the question. Who came up with Alcoa? I forget. Joe Sullivan came up with Alcoa. So Joe, Alcoa, here's the number right here, 3718. Okay, so tomorrow, here's all the charts. 3 days to the upside. You already have your 3 days to the upside. Here's your bottom right here. Last Wednesday, there was no trading on Thursday. Friday was a little higher. Monday has an up day. Today was an up day. What's going to happen tomorrow? More than likely, if it continues in the trend, because a trend has to be more than 2 to 3 days in order to be a trend. So now it's trending to the upside. So you have to decide, do you like this company? Do you like this company at this price? Are you willing to hold on to it no matter what it does? Because take a good look. Let's back this up for a second. Okay, the high of the year is 48. High of the year is 48. The bottom of the year is 24. That is a 50% difference between 24. From 24 to 48 is 100%. It's 100%. But from 48 to 24, that's 50%. So the high of the year, 48, the bottom of the year, 24. If the stock dropped 50%, well, currently it's at 36, would you feel comfortable with this thing dropping to 18? Because that's a 50% drop. 48, 24, that's a 50% drop. Are you okay with that? Never buy something you don't understand. And if you don't understand the range is what's the 52-week high? What's the 52-week low? If it's right here now, am I okay with it dropping down to here? Because it could go there. That's the low of the year. You and me, we are the ones who decide what's too low and what's too high. Because if it's too high, we stop buying. If it's too low, we start buying. It's actually that simple. It's a numbers game. Okay? All right, so let's keep on going. Let's keep on keeping. Oh, so anyway, back to you over here. Now, you asked me about, is there a way to do this without so much money? Well, of course there is. Seasonality shows the low likely is. No, Joe, the seasonality, you can't, no, hold on a second, hold on. Joe, hold on a second. Hold on a minute. Before we go much further, give me a moment to explain this much better. Okay, so let's get, okay. Now, Joe, the seasonality only gives you the average movement over the last 10 years. So you're taking 10 years worth of data. Bulldog, what platform are you using on the screen? This is called Think or Swim. It's free to download. It's owned by Charles Schwab. I do not own it. I do not make any commissions. I get nothing other than the satisfaction of showing you, yeah, there is a better way of doing this. That's the only satisfaction I get out of this. And also, I'm making a documentation for my children and my grandchildren who don't exist yet. So when my grandchildren come, they will say, hey, Dad, how did Papa G make all his money? Well, hold on. Take a look at all his videos. Here they are. Okay, anyway. So, Joe, seasonality. This is not the price. These are not prices. This is the average. Okay, so you take 10 years. Okay, the high of the year is giving a price, is giving a number. Let's say it's 100. The low of the year is giving a factor of 1. So whether, thanks, you're welcome, Bulldog. So whether the high of the year in 2015 is $30 and the high of the year of 2025 is $100, the high of the year still gets a ranking of 100. The low of the year, regardless what it is, gets a ranking of 1. Everything else, there's 266 trading days in a year. All those other numbers get a ranking between 1 and 99. Okay, the low is 0, the high is 100. Okay, those are isolated. Everything in between is between 1 and 99. And then it's putting into this chart. That way you can compare the highs of last year to the highs of 10 years ago. What is the movement in conjunction, in relationship to the high of the year and to the low of the year? Okay, so the seasonality is not pricing. It's just the movement as compared to the high and compared to the low. I guess what I mean is that the seasonality for AA indicates that the 50% drop to the low is not likely. Oh yeah, you're absolutely right. Not at this time period. Not at this time period here, because here's where we are now. But look at here, in April, it goes from here all the way down to here. Yeah, I do not want to own it here. You know, if I'm going to jump into Alcoa, I want to jump in and I want to get out before mid-April. That's me. All right. All right, next question. Oh, wait a second. We're getting to your question on how do you do this using a smaller amount of money? Well, let's take a gander at that now, shall we? Now, originally, the trading strategy came about with the dividends. Okay, we were doing dividend capturing. Now, when I say dividend capturing, let's take a look at I don't know if EOG is on my list. EOG, are those a monthly? No, they're not. Okay, so EOG, see it? Here's the calendar right here. Now, EX Dividend Calendar, you can find anywhere going to Google and put in EX Dividend Calendar into the search bar. And there's a lot of companies that have an EX Dividend Calendar. As soon as somebody comes up with something, everybody else copies it. All right, so the EX Dividend Calendar, if we're looking at EOG, okay, the 16th, it's a 91-cent dividend. Pay attention closely, because you can do this with one stock, you can do this with 101 stocks, you can even do this with a half a share. Now, a lot of companies will allow you what's called fractional share trading. So if you're starting out and you have a little amount of money, I'll give you an example. Now, as a grandfather, I want my grandson to have a certain amount when he gets to a certain age. So me, the ex-wife, the in-laws, my son, and my daughter-in-law, the 6 of us, okay? So my son's 2 parents and my daughter-in-law's 2 parents, that's 6 of us all together. We just taking our spare change, 15 cents here, 20 cents there, 30 cents here, 87 cents there, from the week, throw it into the little kitty. At the end of the week, we take, I put my $3.72 into his account. The ex-wife puts her $2.15 into the account. My son puts his 15 cents into the account. My daughter-in-law puts her 87 cents into the account. And then my in-laws, okay, Tom and Rachel, Tom will put in $3, Rachel will put in $1.57. Between the 6 of us, we put in spare change, okay, at the end of every week. Now, that's not a huge amount of money, but in Robinhood, Webull, and a few other mobile app trading platforms, you are able to do fractional shares. So if I'm only investing for my grandson $15 a week, well, $15 is going to get 1.5 shares of Ford, maybe a half a share of General Motors, maybe 1/10 of a share of General Electric. But here's the thing. The dividend, if you own a half a share of General Electric, well, you get half the dividend. The dividend, 91 cents, you'll get half of that. That's 45.5 cents. Okay, but that's not the only thing. Follow along closely because it might get a little confusing, but it's really not. Okay, so if you like EOG, remember you have to go through all the same steps. Is it the right time to buy? Blah, 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 all that kind of nice, neat, fun stuff. Because you don't want to buy at the high, and you don't want to buy it as it's dropping, okay? Because you can see here, look, okay, here's the high, it drops, turns around, goes back up, drops, turns around, goes back up, drops, turns around, goes back up. It's the same thing. Anytime you look at any stock, as it's dropping, fine, wait for the bottom, wait for it to turn around, go back up. Make sure you like the company. Okay, so here we go. So the 16th, 2 weeks before, on a Monday, 2 weeks before on a Monday. Well, we can't do it on Monday because there was no trading on the 1st. So we're going to jump in on the 2nd. And we're looking for a 91-cent increase before we jump out. Okay, so let's go over to the chart. The 2nd of January. Okay. EOG. Remember I said stocks have a tendency to go up just before the dividend date? Well, here's the dividend date right here for EOG, the 16th. 2 weeks before, on a Monday, well, the 2nd. So if I jump in at the beginning of the day on Monday, well, that's right here. Okay? The opening price was was 124. So we're only looking for 91-cent profit. So as soon as the stock goes up 91 cents, we want to jump out. But here's the thing, look. In the morning, it opened up at 124. And my exit price would be, whatever the opening price is, 124 plus the dividend, 124.91. That's my exit price. Now look at it. The very same day, 125.61. It jumped $1.61 on the first day. So, hypothetically, I'd jump in first thing in the morning and I'd be out in the afternoon. But here's the thing. You can't do that with an account less than $25,000 because they call that day trading. It pisses me off because I'm not actually day trading. I know what I want to do. I know where I want to jump in, I know where I want to get out. And I put that order in before the market opens. So I'm in and I'm out in the same day. But they count that as day trading. Now, I can understand if I jumped in the morning and then hung around the afternoon and watched it. But no. The order's put in, both orders, the buy and the sell order are put in at the same time. Now, let me show you why I really, really like Think or Swim. Okay, let's go down here. Now, I'm going to take my cursor right here, all right, see it? And see where the buy is right there? I'm going to right-click, buy custom, and trigger trade right there. Let's get rid of this. Okay. Let's get out of that. All right. Now, if I want to do what's called a trigger trade, see the trade right down here? I'm buying and I'm selling at the exact same time. I'm buying, and I want to change this right here, because remember I want 91 cents on this particular trade. Okay. So the way the order is on Think or Swim, it's a little bit different on other ones, but this is the only one that I know that allows this. It allows me to buy however many shares. If I only had 50 bucks, I would buy 2 shares, 1 share, whatever it was. Okay. I would buy it at the market, at the open of the day. The second order would be sell the exact same amount, triggered by a 91-cent increase based on the limit order based on the first order. So as the first order fills, okay, when the first order fills, you know what the number is that you filled at. Great. Now the computer is going to add the 91 cents to it and then sell it. Okay, whenever that fills. And that's a good till cancel order. So you just set it, forget it, be done and over with. Now with Robinhood, if you don't have $25,000 to avoid the FINRA day trading rules, you got to buy it one day and sell it the next day. Well, it just so happens that this company, it just kept on going up. Does it happen all the time? No, but most of the time it does. You can take a look at almost any stock, any dividend stock, okay, any dividend stock, 2 weeks before on a Monday, at the market open, add the dividend to it, okay, whether you get 1 share or whether you get 150 shares. Okay, buy it at the market open, add the coming dividend to it, and that's your exit price. Okay, hopefully that answered that question. So if you don't have a small amount, yeah, buy 1 or 2 shares, collect the dividend or the dividends equivalents. Okay, the dividend's 91 cents. What's the difference between the dividend and the fact that the stock price went from 124 to 135? There is no difference. But in this case, you do what's called a trailing stop. So you get it at the market open, and you want your profit, but you want the trailing stop. So as the stock price goes, your exit goes up with it also. So when it turns around, goes back the other way, you get stopped out. It's a little bit more complicated, but it was simple. Set it, forget it. If I have 100 bucks, how many shares can I buy with 100 bucks? Great. If it jumps up 91 cents, that's my exit. Set it, forget it, and once your order is filled, you'll get an email to your phone saying, hey, you just sold this. Oh, buy before and trail the stop through the dividend date at the amount of the dividend yield. Something like that, Joe. But that's for people who have small amounts. The bigger amount is the covered calls. Because the covered calls, you already know what your profit is, and you already know you're only going to be holding it for a week. Okay, so you're in Monday, you're out Friday with your profit. Okay, with that other strategy, it worked great for my daughter. Okay, but once we started doing covered calls, well, it was a lot simpler. All right, it was a lot safer and more predictable too. All right, so let's keep on going with 99 more questions. Okay, uh-oh, damn it. If I hit the wrong button, everything goes hooky. All right, what else we have here for questions? Oh, what do I need to use Think or Swim? You just download it onto your laptop or your, what do you call it, or your desktop. Don't use the mobile app. Congested. It's a lot of information, a tiny little space. It's a little confusing. Yay! That one seems more difficult. Actually, it's not. Once you get the trigger trade set up, all you're doing is just figure out how many shares can you buy. If you can only afford 34 shares, well, you put 34 shares in. If the dividend's 50 cents, well, you put 50 cents in. Set it, forget it, done and over with. You'll get a notice in the email when it sells. Mahesh, how are you doing today? I haven't heard from you in a while. Well, you know, Joe, people got to start somewhere. You know, we all, young kids, like my grandson, 4 years old, he can't afford 100 shares of anything at the moment. His account's not that big. You know, it started out with 50 bucks and it doesn't increase that much. Okay, Stan wants to take a look at Ford. Sweet Jones. Okay, did that make sense? I hope it did. Mesh, any chance to come? Any chance? Okay, Mesh, we're going to get to that one in a little bit. We're going to look at Ford first. Let's get out of here. Go to Ford. Okay, just to let you know, I did buy some Ford today. Okay, the numbers just look too good to pass up for me. Okay, Ford, here we go. High, low, where was it? Where is it? What's the direction? Up, down, sideways, down, and look at where we are now. Okay, so that looks good. Let's take a look at the numbers. If I buy it tomorrow, $979. Okay, so if I buy it at $979, get this one. You're going to get a kick out of this. Look at the strike price. $982. $982. What the hell kind of a number is $982? Think about it. It's not as bad as this one, $917. But it's a valid strike price. Okay, so at $982, if I buy it at $979, well, yeah, I'm making over 1%. That's what I'm looking for. And we all know who Ford is. Okay, granted, they may not have 5 decades of increased dividends, but they have been in business for over 100 years. Yep, thank you, Joe. All right, so the numbers work, so let's take a look at the chart. Is it the right time to buy Ford? Now, I did buy Ford some this morning. I did buy some last week. I just couldn't pass up the numbers, and I couldn't pass up the idea at a $982 strike price. That's a weird number. All right. A year ago, we're at $11.39. Jumped up. The top's at $14.65. Couple of weeks later, we're down at $9.48. Look at this movement here. This nice trading range. Up, down, up, down, up, down, up, down, up, down. Lovely. Now it drops here and we're into a new trading range right here. Here's the bottom of the year. Looks like 940. That's the bottom of the year. You cannot get any lower than the bottom of the year. Now we're talking about Ford. They've been around for over 120 years. Okay, how can you go wrong? I don't hear any news about Ford possibility bankruptcy. I don't hear that. So, last 30 days. Okay, take a look at the last 30 days. Let's open this up a little bit better so you can get a better view. Better view. Better view, Papa John's. Okay, here we go. Down, up, down, up, down. Look at this. Now she's going to the upside. Here's the bottom of the year right here. Okay, now she's going up. Definitely time to turn around. Do you like it? But let's take a look at the seasonality. What does it normally do this time of year? Okay, from that we go here. Wow. Uh-oh. Uh-oh. Oh, well, here's that peak right there. See, here's where we are right now. Here's the peak. But look, normally it goes down this time of year. But remember what we said earlier. Even though historically it goes down, the current trend supersedes the seasonality. Because seasonality is kind of like looking in the rearview mirror. As you're driving forward, okay, this is what we're looking at as we're driving forward, which direction it's going. You look in the rearview mirror, see where you've been. Now, normally it goes down this time of year. But this year, we get the bottom here, now we're going up. Yeah, so seasonality is only trumped by the current trend. Okay, so the current trend has us going up. So you got to decide, do you like Ford? Now, I'm not asking you, do you like the car Ford? I'm talking about the company. Okay, the company's been around longer than General Motors, longer than Chrysler. But the funny thing is, the engines for the original Fords were made by the Chrysler brothers. Isn't that weird? Made by the Chrysler brothers. And General Motors wasn't really a car company. It was a conglomeration of a bunch of smaller. So you got this one big entity. Let's call ourselves General Motors because we deal with car companies. And they bought smaller car companies. And it was a conglomeration of a bunch of car companies, General Motors. The reason why I know that because I had in Oakland, Okay, a 1927 Oakland. It's in the cars with the wooden wheels. Yeah, I had one of those. Now, I read the story on Oakland. They first incorporated in 1909. It was in the 1930s that General Motors bought Oakland. And then General Motors continued to make the Oakland car, but they also made the Oldsmobile, because they bought the Oldsmobile company too, right next to it. So you have the Oakland and the Oldsmobile being built side by side. One would get an Oakland name tag, the other one would get a Pontiac tag on it. And the Pontiac actually was a better seller. And then the Oakland just died away, and they just continued making the Pontiacs. Anyway, neither here or there. Okay, so yeah, I like Ford. I did buy some Ford this morning. Mahesh, let's take a look at Kohl's. Now, Mahesh, we already took a look at Kohl's earlier, but here's what we're looking at. A new 30-day bottom, okay? Eventually, it will find the bottom. Now, here's the thing, Mahesh, which you may or may not know. So let's take a look at it now. Now, you know that this is live on YouTube. Now, what I'm going to do next, I'm going to go to Yahoo Finance. And I'm going to show you what the book value for Kohl's is. And it's going to surprise the hell out of you. Now, it's going to be a little bright. So, because I don't know how to change Yahoo Finance to the night vision, where it's a black background with white lettering. So, it's going to look a little awkward. Uh-oh, where the hell is it? All right, so let's go Yahoo Finance. Hold that thought. Yahoo Finance. Okay, live quotes, all that stuff. If anybody knows how to change this to night vision, and don't tell me to go to settings and change it, because I already did, and it's still coming up white. We're going to look up Kohl's. Give it a second. Here it comes. I'm here. Enjoy. Hey, Enjoy. How are you doing today? All right, so we want to take a look at, on Kohl's, see if right here it says Kohl's. We'll look at statistics. Okay? Statistics on Kohl's. Currently, it's at 1270. Now, we scroll a little bit down because it's all the information. The market cap. Well, the market cap has been decreasing. Okay. Enterprise value basically staying the same. You know, the $9 billion area. Okay. But you come all the way down to the bottom, close to the bottom. Right here. Mahesh, I don't know if you can see this. Book value per share. The book value per share for Kohl's is $35.07 per share. That's the book value. Okay, Joe Sullivan, I use extension called Dark Reader. Dude, if you can send me a link or a little description on how to do that, I would love it. Because every time I do this at night, it comes up bright white and people are hard to see it. If you can show me or tell me how to use Dark Reader, that would be cool. Okay, that way people can see the numbers easier. That would be a black background with white lettering. But anyway, yeah, the book value for Kohl's is $35.07. So currently the price is only $12, but you're buying a $12 stock. Okay, it has a $35 value. All right, let's get out of here. Uh-oh, Rob, that's a big one. Darkreader.org. All right, hold on a second. Hold on a minute. Cool. I'll leave it up and I'll see how I can install it. All right, so let's go back to where were we? All right, here we go. Okay, Rob, the TikTok stock finance over the top in line with my screen in creation of the stock. It's a market wide open to making lining in the stock to get a high percentage to drop, decrease value, but a billion. I have no idea what all that means, Robbie. Terribly sorry. Now, Robbie, I appreciate your comment, really do. However, hold on. If you zoom the camera in on the screen, it won't look old. Yeah, dude, sorry. It's just me here, and I got 7 cameras. 1, 2, 3, 4, 5, 6, and 7. I'm not going to zoom in for each and every individual camera. Ain't happening. That's why this here, this screen, is live on YouTube. Okay? Really have an issue? Open it up on your television. I'm sure you guys all have televisions, and put it up on YouTube. Okay, because YouTube is available on almost all cable channels. All right, what were we just talking about? Oh, okay, yeah, that was that. All right, I got a bunch more questions. Let's do this. 11 o'clock. We got a half hour left to go. Andrea, Advanced Auto Parts. Yay! Please send me, identify which icon is your DM. Sherman. Hey, Sherman, right up here. You see this right, almost get it, right there. Okay, see that right there? It says Dividend Stock Talk, and it has a picture of my face right there. If you click on that, that will take you to the bio in Think or Swim. In the bio, you'll see the 10-minute trader and also a little envelope, like a mail, like a regular envelope. You click on that, that's how you send me a DM. Your other YouTube stream ended. The one that shows the screen. Uh-oh. It says it's still streaming. Okay, hold on. Restream offline. Why is this one offline? That's not supposed to be offline. What's this one? The 10-minute trader. Why is that one offline? Uh-oh. Let's get out of... We can live without this one. I can't live without... What? What the hell happened here? No! Holy shit. I'm going to have to check into that because that's my new tech. My new tech is doing that. We're using Restream, which takes all the... Remember I told you I have no idea how to use the software? Yeah, I know you didn't do it. I told you years ago, well, that's why I have 7 cameras, because I don't know how to use the software. So I had someone come in and do the software for me. And the software's not working. YouTube's not working.
What?
YouTube's not working.
Give me just a second.
All right, he's going to come in and check it for me. All right, so we'll double check that one. We only got a half hour left to go. We'll figure that out for tomorrow. Sorry. Okay, Andrea wants to take a look at AAP, Advanced Auto Parts. Andrea. Okay. Here's your 30-day bottom here. Jump back up. Now it's going back down again. Can-Ann Comics, how you doing? Okay. A couple of weeks ago, there it was. She shoots up. Now she's falling. So Advanced Auto Parts, I'm thinking maybe a week or 2 before you find the bottom on it again. So let's write it down for next week. Sorry, Andrea. Craig, I've invested in tsxorg.org. Is it a scam? It changed to TMX. That changed you. Dude, I'm terribly sorry, dude. Okay? I can't help you out. Craig, I only do dividend stocks that have at least a bare minimum of 2 decades of consistent profitability. Okay, so what you're asking is something totally different than what I'm looking at. If it's not a dividend stock available on the U.S. stock market, it's going to be a no. Sherman, please identify which icon is your DM. Okay, we already did that. It's right up here where it says the picture of my face in the top left-hand corner of your screen. La 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 la. Okay. Our Rye guy just here to watch. Hey James, what percentage of your account do you put into each trade? Well, if it's going to be 5 different stocks, it's 20%, 20%, 20%. Mackenzie, oh, look at that. Oh, all righty, thank you for that. How can I learn this? Mark, just keep coming back every night. I'm here every single night, 9 p.m. Eastern Standard Time until about 11:30, which is going to be about another half hour or so. How many shares do I need to do this? K-Swiss, it's always going to be different. It depends on what your situation is. If you're just starting out, start small. I always tell everybody, use a virtual account, paper trading account to start off with. I have a paper trading account. Look at this. Okay? Paper trading account, live account, live account, live account. Okay? But I always tell everyone, see them right down here. Whoops. Right down here. 1, 2, 3, 4 here. Okay, this one here is a paper trading account. I use this one so I don't mess up because I do make mistakes. Good education. Thanks. Glad you like it. Scott, how much is the loss if you finish out of the money on that? Okay, Scott, number one, I do all my trades on a Monday. Tuesday, Wednesday, Thursday, I just take a quick peek, see where they are, see where they're going. Friday is the important day. What did I buy it for? What's the option price? What are my options? I know that's a weird name, but what are my choices on a Friday afternoon? Remember, the stock market closes at 4 p.m. Friday afternoon. So I jump on at 2 o'clock to make sure all my positions. Now, I do have a live morning trading group. It's a paid group. I'm not trying to sell anyone anything here, but if you're interested, there it is. We take a look at the stocks on Friday. What did I buy it for? What are the odds and probabilities of me winning, losing, drawing, breaking even? So all my trades, I try not to lose at all. If I have to roll it into next week to avoid losing, then I'll do that. Now, I had one account, I had 6 accounts last year. This year I have 7. 6 accounts last year, I had one account, had 0 losses all year. Yay! That works for me. But, you know, they do come up once in a while. Like I made a mistake in my own personal account. I had the hurricane. Remember the hurricane that came through? Yeah, no water, no electricity, no internet, no telephone for 3 days. Yeah, day number 3 was a Friday. I couldn't get in to make my trade, so I lost a lot of money. Anyway, how do you get out of a trade once you're in it? Okay, Leo, how do you get out of a trade once you're in it? It really depends on what the trade is. If you buy a stock and sell an option, well, before you can get out of that, you have to buy that option back and then sell a stock. So whatever you did, you have to undo. Okay? So if you buy a stock, to get out of it, you sell it. If you sell an option, to get out of it, you have to buy it back. There's always an open, always a close. So you got to open it, you got to close it. What happens when the stock you sold calls, drops, and you get stuck holding the stock? Well, that's an excellent question. Escapology. Rule number 1, never buy something you do not understand. What that basically means, if you take a look at a stock, you should know before you buy it. What's the high of the year? What's the low of the year? What is the range? How high can it go? How low can it go normally? When is the best time to put your money in the stock? That's my biggest problem. Monday morning. First thing, Monday morning. That's the best time to put it in my humble opinion, for this particular strategy. Because I'm looking to get a covered call on Monday, be out on Friday. Now this I wouldn't do, because look, down, up, down, it's coming down. Okay, when it's coming down, I don't want to jump in. I want to jump in here. See, it drops, here's the bottom, 1 day up, 2 days up, this is where I want to jump in, 3rd day to the upside. Okay, take a ride, I only want 1%. From the bottom here at 41, it jumped all the way up to 49. That's an $8 move, that's 20%. Okay, from the bottom here to the top, it's a 20% move. Okay, I only want 1. Because see, here's the bottom, 1, 2, 3, that's where I want to jump in. Okay, I jump in, get my 1%, I'm out. That's me. You have to figure out what works for you. All right, but it was a great question. Once I learn how to DM you, I will send you my phone number. Alrighty, that works. Keitha Sherman, Click on his picture until you see the message. Yeah, right there, the top left corner, click on my picture. Yeah, but when the stock goes down and starts moving up, how do you know it's a great time? Ooh. All right, do you let the ones you want out of on Friday just expire? Absolutely. Now, it always, see, Friday is one of those days, I'm going to quote John F. Kennedy. You ready? We cannot answer, or I cannot answer the questions of Friday afternoon with the information I possess today. Okay, what I know today, okay, whatever account I'm looking at, okay, Intel, Macy's, Mara, Riley, Riot, U.S. Steel. Whatever I bought those for, U.S. Steel, okay, I bought U.S. Steel at $33.52. I cannot tell you what I plan on doing with U.S. Steel at 3 o'clock on Friday afternoon until I know where it is sitting at Friday afternoon. But what I do know, I know what my average price is, $32.36. I know the strike price I sold, the $32.50s and the $31.50. Okay, this I know. What I don't know is where is the stock going to be on Friday afternoon. So that's why I jump in on Friday afternoon at 2:30 to take a look at all my positions. Where is it? Where did I buy it? What option did I sell? Where is it at now? What are my opportunities to not lose money? What do I do next? Spicoli! Holy cow, Spicoli. Wait a minute. No, that's Kanicki. Sorry, I was thinking Kanicki. Spicoli. I remember who Spicoli is. Okay. When the price does hit the strike, do you find yourself rolling in the next week because your option does not get exercised more often than letting it expire and entering it again on Monday? Okay, Spicoli. Good question. Again, I cannot answer the question of Friday afternoon with the information I possess today. However, on a Friday afternoon, I will take a look at where the strike price is at this moment in time, where my position is at this moment in time. What if I do this? What am I going to get? What if I do that? What am I going to get? What if I don't do anything? What's going to happen? These questions, like, Johnny, what's behind door number 1? Well, Bill, behind door number 1, we have this situation. What's behind door number 2? Well, door number 2, if we do absolutely nothing, this is what's going to happen. What's behind door number 3? Well, Johnny, behind door number 3, we don't know what is behind any of those situations until it is in front of us. Again, I cannot answer. John F. Kennedy said in the 1960s, we cannot answer the questions of tomorrow with the knowledge we possess today. I didn't use that Boston accent like he has, but you know what I mean. I can't give you the answers until it's there in front of me. Okay? But, yes, there are ways of not losing. How often do you lose on your call options? Never. I don't lose on the call options because I look at it twice a day. Now, be 100% honest, I lost last year a couple of times because I hit the wrong button. I shit you not. I hit the wrong button and I lost some money. I did. It happens, okay? Because I'm doing 6 accounts. Click. Ah, shit, I hit the wrong button. It happens. It does, okay? Now, once in a while, I did something wrong, okay? I lost $2,500 because of the hurricane. I couldn't get a trade in on Friday before the market closed. I was literally driving up and down the street on US 19 here in St. Petersburg, driving up and down the road, trying to find an internet signal so that I could make my trades. Couldn't do it because the hurricane knocked out everything, okay? Now, there was one total misunderstanding. I lost $3,500 on one because I hit the wrong freaking button. It happens. Okay, it's part of the game. Don't play the game if you're not ready for the repercussions. All right, so we're not going to look at anything else because we have 14 minutes left. And I said I will answer every single question. I got a whole bunch of questions here. So let's take a look at the questions and see what we can do. By clicking on the picture, you'll see the message. There you go. That works. Thank you very much for that. How many you need? Okay, Mark, I have no idea what you mean by how many you need. Asking, thank you for that. Thank you for that. We can't see the full screen. Okay, I don't know why you can't see the full screen. I don't know. Okay, stock. If the stock drops instead, do you hang on to it? Okay, stock. Everything is a numbers game here. It's all by the numbers. Okay, what did I buy it for? What's the high of the year? What's the low of the year? What is the direction? Where is it currently moving? How do you know that you're going on a winning call option? You don't. Sean. It's like, oh, wait. Every hand's a winner, and every hand's a loser. The best that you can hope for is to die in your sleep. You got to know when to hold. It's the same thing. You don't know what you got, and you don't know how to use it. The more you do it, the better off you are. Okay? What my suggestion is, it's free information. Just keep coming back and watch and keep asking the questions. You ask a better question, you get a better answer. Follow along. Don't do anything you don't understand. You buy a good company. If you don't like the company, don't buy it. If it doesn't make sense, don't buy it. The Gambler, great song, yeah. If you don't know what you're doing, don't do it. That's why they have mentors. That's why they have teachers. Okay, I'm teaching you here this stuff for free. I'm not asking for any money from anyone. Ask me a question. I'll tell you exactly how to do it. Okay, so don't do anything if it doesn't make sense. If the stock goes down, well, fine, the stock goes down. That's what they do. Look, down, up, down. Are you expecting the stock to come to your house and take the dog for a walk, empty the trash, make the bed? They don't do that. They go up, they go down. That's all they do. The best you can hope for is to watch it and see where it's going. If it's going down, it will keep going down until it stops. When it stops, it will turn around and go up. Well, how high it will go? It will go up until it stops, and then it will turn around and go back down again. How far down it will go? It will go down until it stops. Who decides? You and I decide. You and I decide what is too high. If we thought it was worth $60, it would have kept on going up. But we, the buyers and sellers, say, no, it's not worth $60. So at 49, we start selling, and then it drops. Okay, we decide what's too high, what's too low. Okay, Matt, do you invest in penny stocks? No. Sorry, I don't do penny stocks. The only thing I do is dividend investing for weekly cash flow. Until cryptocurrency comes up with a way to safely, predictably, consistently invest in, then I'll do that. Penny stocks, no. Sorry. No historical performance behind it whatsoever. Roll Tide, brothers, cool beans. Good evening from Alabama. Blue Heron back again. How are you today? All right. My current bank account is down, but my financial literacy is up, thanks to wise men like yourself. Well, you're welcome. Why do dividends matter if you're not holding? Uh-oh, K-Swiss, hold on a second. Sean, do you have to do options to do your 1% strategy? Sean, you can do whatever you want, okay? Now, I'm just here showing you what I do. What you decide to do is totally up to you, okay? But this is what I do. I've been doing it for 15 years. Now, I've been trading for 20. My first 5 weren't that great. Made a lot, lost a lot. It wasn't until my 9-year-old daughter jumped on my lap and said, Daddy, teach me what you're doing. Simple, safe, predictable, consistent, no way to lose. Another question. What is the idea mindset on how many shares you put into the stock? How much money do you have? 98% of all of my money is invested at all times. The reason why? I believe in the American economy. Every dollar I invest into an American company. Steve, you can still roll them forward on Sunday night if you want. The ones you are losing on and others you like to reinvest. You're absolutely right, Steve. Okay, Apple, currently on puts 90 days out. Yep. Okay, I don't do puts. Not here, anyway. La 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 la. Okay, so K-Swiss. Why do dividends matter if you're not holding? Great question. Now I'm going to get to that one second. So is like 20 a good amount or not? Okay, Matt, I'm not 100% sure what the question is. Okay, you got to remember one thing, Matt. I got 6 cameras going, which means I have 6 sets of questions. So when you ask me a question and it's very short and it doesn't have a subject, a point, and a follow-up in the form of a question, I have a tendency not to be able to follow it. So you have to make the full question in each entry. You can't do one entry, the next entry, the next entry, because I have so many different questions coming from all different directions. So I don't really understand the statement that you made. Okay, so K-Swiss, why dividends if you're not holding? Well, here's the thing, all right? There's 9,813 different companies in the U.S. stock market that you can invest in at any time. Are they all profitable? No. Now, the ones I like, thank you, Matt. The ones I like have to have 20 years or more of increased profitability. Well, how do you find that out? Well, if you want to, you could read all 9,813 quarterly reports or annual reports to figure out who's consistently profitable. Or you can go the cheap, easy route, which I'm a lazy trader, I admit it. I use that. Here it is. You ready? 2 different types of companies. Company 1 will take all their profits, put it back into the company for capital growth. As the days go by, the company gets higher and higher and higher. Yeah, that's capital growth. Yeah, I don't do that. Hold on a second, Matt. I'll get that in a second. The second company, or the second type of company, they take their profits and they share the profits with the shareholders. That's me and you, or you and me, however you want to look at it. If they're profitable, they will share their profits. Great. Well, how do you know if a company is profitable for 20 consecutive years? Again, you could read the annual reports, the quarterly reports, blah, 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 whatever. Or you could go right to the dividends. If the dividends increase every single year, well, here's the thing about a dividend. The dividend cannot increase unless the profits increase. Because if a dividend is a portion of the profits have to go higher in order for the dividends to go higher. So if I go straight to the dividends, how consistently has this company increased its dividends? Well, believe it or not, there are people in the world somewhere that do nothing but read all that crap and say, all right, well, this company here has increased its dividends for 55 years. Well, great, that makes my list. This company here has increased its dividends for 4 years. Nah, that doesn't make my list. That's one. That's one reason. Sharing the profits. Second reason, and this is the main reason, okay? I'm going to need some artwork to go along with this one. Okay. Right here, this is an EX dividend calendar. Each one of these little green dots represents the EX dividend date. That means that's when this dividend is going to be paid. There's 4 dates to remember when it comes to dividend stocks. Date number 1 is the announcement date. Okay? Announcement date right there. Hey, this is James from Dividend Stock Talk. This is how much money we made this year. This is what the dividend we are paying to our shareholders, and this is when you get it. That's the announcement date. Date number 2, the EX dividend date, is the last day the stock trades before the dividend is paid. That is represented by these little green dots. Okay? Cisco pays its dividend on the 3rd of January. Colgate-Palmolive pays its dividend on the 19th of January. Oh, that's 2025. We went 2024. 2024. Hold on. 2025. Here we go. Sorry. Procter & Gamble pays its dividend on the 24th. Lowe's pays its dividend on the 22nd. So each one of these green dots represents when the company pays out the dividend. Date number 3, the date of record. Whoever owns the stock on the date of record is entitled to the dividend. So if you buy the stock, Abbott Labs, on the 13th, you're entitled to the dividend. Unless you sell it on the 14th, then you don't get the dividend. Okay? Whoever owns the dividend on the date of record is entitled to the dividend. Date number 4, the payment date, self-explanatory. So why dividends matter if you don't hold them? Because just before the dividend date, the stock has a tendency to increase in value. So knowing when the stock is going to move is the main key to the whole equation. Dividend investing for weekly cash flow. If I know this is the week, okay, week number 1, 2, 3, 4, week number 4, which is next week, we have Caterpillar, Colgate-Palmolive, Zytest, Apache, Lowe's, Pfizer, Procter & Gamble. All these companies are paying out their dividend next week. If I want to take advantage of it, I would have bought these on the 6th, which is 2 weeks before, because I want to give it 2 weeks for the stock to move up. So I can jump in, do a covered call, which is a safe strategy. Remember, 9-year-old, simple, safe, predictable, consistent, no way for her to lose. I had to come up with a strategy specifically for my 9-year-old daughter so she would not lose. If she lost, she would cry. Me as the dad, I would feel like shit. Mama in the other room would come out and say, "What the hell's going on? You're sleeping on the couch." Yeah, no, I didn't want that to happen. So, simple, safe, predictable, consistent, no way for her to lose. That's it. That's why dividend stocks. They have a consistency to go up just before the dividend date. Simple trade. They share their profits. That's what I'm looking for. Apple, currently on puts 90 days. Sorry, dude, I don't do puts here. 75 Corvette. Ooh, nice car. Don't. This is a great class. Yay, Leo, glad you like it. Can you lose? Yes, you can. Okay? The only way you can lose, and then I don't understand why people even think this. The only way you can lose is if you sell it for less than what you paid for it. Okay? If I buy a stock, let's go back to here. If I buy Advanced Auto Parts tomorrow morning, $46.25, if I buy it at this price here, that is my entry. That is what I paid for it. If I sell it for less when I pay for it, it's no one else's fault but my own. Can this stock go from $46.25 down to $12? Yes, it can. If it drops to $12 and I sell it in panic, do I lose? Yeah, I lose. Whose fault is it? My own. Because stocks go up, stocks go down. Can it go to 12? Yeah, it can. It can also go to 80. What does it normally do? If you don't know what the stock normally does, you shouldn't be playing this game. You shouldn't be buying unless you know what you're doing and what the risks are. Can you lose? Yes, you can lose. But the only way you're going to lose here is if you sell for less than what you paid for it, if you make a mistake, if you hit the wrong button. Most beginners are going to lose most of their money at first by hitting the wrong button. I've done it. I do it every year. Every year, once or twice, I hit the wrong button. This year it cost me $3,500. I hit the wrong button twice. All right. Let's keep on keeping on. Leo, can you go through the trigger trade again? Just the selection. Okay, Leo, I already did the trigger trade earlier. This here is being recorded on YouTube. You can go back to YouTube and rewatch it. Oh, Black Eyed Joe, we haven't done Walgreens yet. I like Walgreens. Made a lot of money on Walgreens last year. Okay, so here's Walgreens. Here's the high, here's the low, here's where it was. Oh, wait a second, wait. We got 1 minute. Okay, high, low, was, is. Look at this action right here. It jumped up nice. I wouldn't suggest jumping into it now. Look at this. The last 30 days. Okay, look at this big jump. If you think it's going to continue going up like that, yeah, it might. Not something I want to do. Stock the Ford stock. Yeah, 75 Corvette. We already looked at Ford today. Happy Tuesday. Yay! WBA. What about PLCE? Dude, we're at 11:29. I'm not going to look at anything else. I'm just answering questions. Okay? If you want to ask, come back tomorrow. I'm here every night. What are cheap dividend stocks and how do I find them? Simple. You go to, you should be a screener somewhere on your trading platform, whatever trading platform you use. Companies that have consistently increased their dividends for however many years you want. Price range between here and between here. There should be a screener somewhere. Your screen is too bright to read, even if I put a screen on low. Yeah, I get that. Can you change that in your browser setting? Go to the dark mode. Yeah, John, I already tried dark mode. Okay? A lot of the websites are in dark mode, but Yahoo Finance is not. You love OBS? I love OBS also. I wish I knew how to use it perfectly, but I don't. Tafisco, how are you doing? Thoughts on Verizon? Come back tomorrow, ask me tomorrow. I'm done now. I'm just answering questions. Siri, jumping up Friday, 5% dividend. Yep. Arb, you're a little late, dude. It's 11:31. I finished at 11:30. I'm just going through the questions. Once I'm done with the questions, we're done for the night. Can a 1-week call option be executed any time that the week or only on the set expiration? No. See, U.S. stocks, U.S. stock market, the options can be exercised any time at all. European options, only on the date of expiration. Lucius, what are you calculating for 1%? The value of the single stock with the premium for the covered call being 1%? Lucius, you ready? Walgreens, the current price, $12.22. Okay? What is 1% of $12.22? You take the decimal point, move it over 2 places. It's 12 cents. 12 cents is 1% of $12. Okay? So if my account is $100,000, 1% of $100,000 is $1,000. If my account is $100, 1% is $1. 1% is 1%. Matt, is 20 shares good for a stock investment, or should I have a better way to do it? Okay, Matt, everybody is different. Earlier today, there was like over 400 or 500 people here. We all have a different amount that we are comfortable with. You have to decide what is right for you. I always suggest people do not do anything until you understand it completely. I hope that makes sense. All right, let's keep on going. Almost done. Mason, what are some cheap dividend stocks? You gotta find them through some search engine. How do you roll a call forward? Jack. Fuck Jack. Some of the names you guys come up with are interesting. Fuck Jack. Okay. Ask me that tomorrow, I'll show you. Jamar, how long do you have to own a stock to get a dividend? 1 day. How we feel about Nike again. Love Nike. 75 Corvette. Hello. What are some cheap dividend stocks? How do I find? We already answered that question. Matt, if you mind me asking how much you make last year in stocks. Well, I had 6 accounts last year. Are you talking about overall together or on average? I averaged 1.2% last year. 1.2% every week last year. That was my average. YouTube channel dividend stocks too? No. YouTube channel is the 10-minute trader. So DDS up in the top left, right up here, will bring you to my bio, which has all the links in it. My main channel is the 10-minute trader. If you've seen any of my videos, it's always Hey everyone, my name is James. This is Dividend Stock Talk brought to you by The 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, looking for a safe, predictable, consistent 1% per week. That's what usually every video comes out with. The 10-Minute Trader. Which one of your YouTube videos should I watch to learn the basics? Ooh, holy cow. I couldn't tell you that, dude. There's over 700 of them. Michael David Robinson, where are you tonight? Where in the world is MDR? If none of you know, MDR is a professional pilot. He flies everywhere. Thank you, Chutch. B-Rad Daddy, good to see you there, dude. Have a good night. We'll see you again tomorrow. How do you roll forward a call? Hey, Jack, we'll look at that one tomorrow. Mark, you have 100,000. I get more than 100,000, but thank you for asking that. Jack, we'll do it again tomorrow. In my hangar playing. Cool beans, dude. I want to come out and hang out with you one of these days. Take my little RV, just drive up there, park next to the hangar, and just play with those toys. You got some cool-ass toys, dude. All right, it's past 9:30. That's all the questions. Every single question has been asked and answered. We are done for tonight. We'll see you guys again tomorrow night. Same bat time, same bat channel. So now the end is near. And so I face the final curtain. My friends, I'll say it clear. I'll state my case, for which